June 12th, 2025. I'm making a little bit of a quicker video today. I don't have a ton of time, but just wanted to start off. Obviously, we have a 3-bar micro channel, 2, 3, 4. It's at the bottom of the trading range. You know that we're probably going to test the close of bar 64. I thought that early in the day we might have to test below the bar 58 low, but obviously that did not end up happening. I do not trade before bar 7, but had you bought the close of bar 4, you probably would have added during bar 6 and made a profit. Bar 9 is an interesting spot, another 3-bar micro channel. It's leg 2, but these are pretty strong bars. So we very well might get a third leg. When the third bar of the 3-bar micro channel closes within 2 ticks of its high, or IBS above 85%, the odds of immediate follow through go up to 56% instead of 48%. So it gives you an 8% increase in the odds of getting immediate follow through. When that occurs in leg 1, it goes up to 68% chance of immediate follow through. And this is one of those situations here. 42 did get immediate follow through, and it was in leg 1, so there was a 68% chance that 41 got immediate follow through. As far as bar 9, it was a little bit difficult to buy here just because the close of 64 is right there. I did take the buy. I thought it was good enough because of how strong it closed. I was initially looking to buy a pullback if bar 9, it had a tail. If you were watching, it had a tail for most of the bar. It was, in this area. And then in the last maybe minute of the bar, it grew and closed really strong. And so for me, that's good enough. I bought the close of 9, but I know I'm buying high in a trading range. So if I'm doing that, I want to see the market break out above the trading range, which is exactly what bar 10 did. There's another example. I'll just go pull it up. Something similar. Here. I was looking at this yesterday. If you're buying the close of bar 15, you're buying the top of this trading range, right? You could argue the trading range is up here, and obviously we broke out above that. But just for the purposes of this, let's just call the bar 4 high the top of the trading range. If you're buying the close of 15, we need to break out above the top of the trading range. And 17 is what does that. It confirms that this is probably actually leg 1, and you should get 3 or 4 more total legs up. Same situation over here. If you're buying the close of 9, you want to see a breakout above the 64 high to confirm that we are breaking out of the trading range and that we should get, 3, maybe 4 total legs up, which we end up getting, 1, pullback 2, pullback 3, pullback 4 total legs up. So when 10 broke out above the bar 64 high, I thought that was good enough follow through and it would be okay to start looking to add. I tried to add on the pullback at the bar 9 close, and I was not filled on 12. So I ended up just having my initial buy, and that was it. 12, 13, 14. I did not add on those. I ended up getting out of my other long, basically at the high tick of 15, a tick below the high tick of 15. And I just basically waited because I thought 14 was leg 3. So I didn't really want to buy the close of 14. When we got 17, I thought 17 was reasonable to buy the close because if it gets follow through, then you can just get out. So it makes the management easy. So what I did was I bought the close of 17, and if 18 was a good follow through bar, I was going to exit below it. And 18 was a good follow through bar, so I put in order to exit below the low of 18. And instead we bounced, and I ended up taking 0.5R rather than 1R because of 17 and 18. When you get something like this, it's usually better to just try to get out quickly. So I ended up getting out basically at the close of bar 16 during bar 19 during this bounce. We have 2 legs down, 1, pullback 2, and it ends up being 4 legs down for the bears. I thought we might have to test the bar 5 high. We obviously did not end up doing that. But we got 4 legs down for the bears and then 4 legs up, 2, 3, 4. So 4 legs down for the bears and then 4 legs up for the bulls. I thought 41 was a pretty good trade. I did take the short on 41. When we got 42, I looked to add basically around the close of 41. So I sold the close of 41, then we got 42. And then as 43 bounced, I sold more. And then obviously 43 became a big bar and it did fill most of my scale-ins. It came back down a good ways, but it did not reach the target, which is 2 ticks above. The target was about right there. I know it missed my limit order by 2 ticks. So 43 went far enough that it'll probably need some sort of second leg, but I still think after 43 it is okay to stay short, which I did. And then I got 44, not a good bar, but it's not enough for me to exit because I would need either a breakout from the bulls or a 3-bar micro channel from the bulls. And we got the 3-bar micro channel on bar 45. So I ended up exiting on the close of 45, which basically brought me back to break even on the day. 46 is immediate follow through. So we have 4-bar micro channel, 4-bar micro channel. We could be in a late leg for the bulls, but I thought that this was a really good opportunity for the bears, and it looks like it's failed. So when we got 47, I bought the close of 47, basically on the same premise over here. If 48 is a good follow through bar, I'm just going to get out below 48. Otherwise, I'll try and hold for the symmetrical second leg. And 48 was not a good follow through bar. Hence, I held for the symmetrical second leg, and I got out up here. And basically ended up being the same price as the close of 19, which is an important area to be looking to exit. It's the high of the trading range. It's the high of the channel, right? Oops. See, we got a channel line break and then a retest, and now we might be free to come back down. But nothing is all that good in this area. So as I said, I bought the close of 47, and then I got my symmetrical second leg, and that was everything I did on the day. I don't trade past bar 65. It's just a little bit lower probability for my particular signal. If I did trade past bar 65 and I was in this trade, I would probably be exiting below 71. You do not want to see 71. So if you were long anywhere up here, 69 goes below 68, and then you get a little more than a half an hour, I believe, or almost exactly 0.5 hours. So I would get out below 71 if it closes strong, or you can wait for follow through. But you're playing a dangerous game waiting for follow through at the top of the trading range if you're waiting for the bears to get follow through. So overall, I had a pretty good day. You know, this is probably a little bit of a dangerous area to be. Yeah, I would exit below that if I was still long. Overall, this is a dangerous area, and you can get chopped up pretty good on some of those trades if you hold too long. But for me, I still thought that 42 close would get tested, which it obviously did. But it's not worth holding after 45. When I get a 3-bar micro channel against me, I have to get out on the close of 45. And so that was essentially the logic. And then again, it's still these buy the close. There's still the 3-bar micro channel trades. It's just that you have to keep in mind that we might that I'm just taking the scale in differently. I don't want to buy the close of 45. I'll buy the pullback. And basically the way you buy the pullback and the way that you manage it is what's important. Still in a bull channel, but we have 4 or 5 legs up. It's not really all that great to be looking to buy in this area. So for me, with this many legs up, I would I'm probably more interested in looking to sell a reversal down on the daily chart than I am in buying. Obviously, I'm not trading anything on the daily chart, but it's just something to keep in mind. If we get a good reversal signal, we could probably come back down to the bottom of the trading range, which I believe is in this area. This is a leg in a trading range, a bull leg. So we should get a bear leg. And that is basically it.